Bismillahirrahmanirrahim. Subject is Principle of Auditing, and this is third lecture on Introduction to Audit. Teaching agenda for today's lecture is Type of Audit, Advantages of an Audit, Disadvantages of an Audit. Moving further, Types of Audit. There are three types of audit: financial audit, operational audit, and compliance audit. Let's discuss it one by one. Financial statement audit. Financial statement audit are conducted in order to determine whether overall financial statement, which we have already discussed, that income statement, balance sheet, and statement of changes, statement of cash flow, are according to specified criteria in financial reporting framework that is comprises of International Financial Reporting Standard and Company Ordinance 1984. While for financial institutions such as Banking Company Ordinance 1962 are applied. Financial statement are, which we have already discussed, is balance sheet, income statement, statement of changes in equity, and cash flow statement, and related disclosure to the notes to financial accounting. Balance sheet, other name is statement of changes in financial position. This shows that how much assets the company own and how much are financed by debt and how much are financed are by shareholder equity. And financial statement also show the financial position. The balance sheet shows the financial position of a company on any specific date. It also classified the asset as current asset and long-term assets. Income statement shows the financial performance of the company for any specific period. It is mostly comprises of profit is calculated as revenue minus expenses. And statement of changes in equity is basically that the profit is then sum up to the retained earning portion of retained earnings item in statement of changes in equity. So statement of changes in equity comprises of shareholder in common shares, share premium account, retained earnings, any other reserves, minus that treasury stock. So the company, the auditor will audit these things in statement of changes in owner equity. Cash flow statement is comprises of income from operating activities, for financing activities, and from investing activities. The three heads are there in the financial cash flow statement. And all others, since a lot of information cannot be placed and cannot be accommodated on the surface or on the face of these financial statements, show additional information are disclosed in the note to the financial statement. So the auditor will also audit these financial statement as well, that it is the presented financial statement show true and fair view or not. Operational audit. Operational audit is other than the financial audit. It may be any part or parts of the entity operating procedures. and methods of purpose evaluating the efficiency and effectiveness of that part of the entity. When the auditor completed the operational audit, recommendations are made to the management for improving the operation or that are normally expected. What are the examples of operational audit? Let's have a look at the example. First example, operational audit is evaluating the efficiency and accuracy of processing payroll transaction in a newly installed computers. So uh, payroll, there are a lot of employees in the organization. If the payroll transactions are not efficient and the newly installed system doesn't fulfill the specification or the requirement of the company, then external auditor may be hired in order to show its weaknesses and make recommendations. Another example where most accountants would feel less qualified in evaluating the efficiency or accuracy and customer satisfaction in processing the distribution of letter and parcel by the courier company such as TCS or OCS, etc. So the auditor will tell you that how to process these letter and parcel to the customer that they may receive it on time. He will give you a checklist, or he may develop a proper system, or he may develop SOPs to dispatch the letter and parcel to the customer. Third example is if the management feel that inventory is an area which need proper recording and need preventing of theft and deteriorations. So inventory is a major area of concern of all the company. Then auditor investigate the issues and suggest proper internal control for inventory management system. Or he may suggest a computerized inventory management system and then train any employee to handle the issues in inventory management system. In operational audit, auditor is not limited to accounting record only. So the scope extended behind these accounting record in operational audit. Operational audit also include evaluation of organizational structure, computer operation, production methods, marketing area, and any other area in which the auditor is qualified and gave consultancy to the company. Operational audit is done in order to check the efficiency and effectiveness of operations. Although it is difficult to evaluate, but again, operational auditor evaluated on subjective matter. So operational audit is not an objective like financial audit where the auditor just check the records of accounts and other financial matter. In operational auditor, the audit is extremely based on subjective judgment. So operational audit is more like a management consultancy rather than financial consultancy. How to conduct an operational audit? The conduct of operational audit and the reported results are difficult to define than other two type of the audit. So when auditor find any weaknesses, then how can it be said that the weaknesses is really weakness? What is the benchmark? What will be the benchmark with the auditor? So it is a really difficult task for an auditor to conduct operational audit and pinpoint the weaknesses in any specific area of the entity. Moving forward, compliance audit. Compliance audit is basically about that the company operations are the company employees really follow the rules, regulation, and SOP set by higher authority. So the purpose of this audit of compliance is to determine whether entity is following. Entity means the company is following specific procedures, rules, regulation as set down by some higher authority. Compliance audit for private businesses could include determining whether accounting personnel are following the prescribed rules by the company controller. Controller is basically maybe a treasurer, maybe a CFO, maybe director of finance. So compliance audit, this is one is an example that compliance audit may be in order to maybe carried out in order to find out that the accounting personnel, the people who are working in accounting department are really following the procedures are the rules and regulation are the SOPs that are designed by the treasurer or the company controller. Maybe the auditor is, this is another examples. For example, if an auditor is hired to review the wage rate that the company is compliance with the Minimum Wages Act or not. Similarly, the compliance audit may be conducted to investigate the contractual agreement of banks and other lenders to be sure that the company is complying with all legal requirements is set out by the contract with these financial institution or lenders. Compliance audit. Result of the compliance audit are normally reported to someone within the entity being audited. So it is the report of the compliance audit are not to any external person, not to the shareholders. Or to any other stakeholder. A significant portion of the work is done by auditors employed by the entity itself. Means this is the internal auditors, not the external auditor. So mostly works are done by this. The external auditor is just come to check either there is the company staff is complying with these internal control or not. One of the example, let's suppose that the government is hire any auditor to examine that the taxpayer for compliance with federal tax law or not, where an auditor is employed by the government to audit the taxpayer tax return. So it is compliance audit that the government's check that the companies is really complying with the income tax ordinance of the relevant country. In Pakistan, it is compliance with the income tax ordinance 2001. Moving further, advantages of auditing. First advantage is to resolve the dispute between whom management, between the management and the shareholder, or between the management or with any other persons, because an independent view of the auditors will be acceptable to the both parties. Here is an example of partnership, which is complicated type of business. Usually conflict arises due to profit sharing arrangement. So it required an investigation of the account to ensure that accurate assessment of distribution of the profit is according to the contract between the partnership or not. So the first advantage of the audit is to resolve the conflict between the management or the partners of the company. Second is changes in ownership may be facilitated if the past accounts contain independent audit report. This is about the private company. If the private company get audited its financial statement on a regular basis, then it will be very easy for the new investor to buy the shareholding of any of the shareholders in their private company. Third, if the company is going to get finances from lenders or any financial institution, it will augment its positions if its accounts are audited by an independent auditors. However, banks will be more concerned about past historical accounts which must be properly audited. Bank is not limited to these audited account but also carry out further investigation to extend its debt. This is fourth advantage is audit must be in-depth examination of the business, which enable the auditor to give more constructive advice to the management, which lead to the efficiency of the management. Moving further, what are disadvantages of the audit? The first one is obviously the audit fee. The services of the auditor must be paid for. It is for the reason that very few partnership and very few sole traders, sole proprietors are going to audit their accounts. So due to fee, the other two type of businesses, partnership and sole proprietorships, reluctant to get audit their financial statement. The auditor involves staff and management and giving time to providing information and auditors. So company will deploy staff and management when dealing with the external auditors. The last disadvantage is disturbance in routine work. Professional auditors should plan their audit carefully to minimize the disturbance. This is all about today's lecture. See you in a coming lecture. Thank you.